Here are some top FAQs on stock market chart analysis. 1. What is technical analysis? Technical analysis involves analyzing past market data, primarily price and volume, to forecast future price movements. It uses charts, patterns, and indicators to assess market trends and make predictions about stock prices. 2. What is a stock chart? A stock chart is a visual representation of a stock's price movement over time. It typically displays price changes along the y-axis, vertical, and time along the x-axis, horizontal. Stock charts help investors and traders analyze trends and price patterns. 3. What is a candlestick chart? A candlestick chart is a type of stock chart that uses candles to represent the price movement within a specific time period. Each candlestick shows the opening, closing, high and low prices, with a body and wicks, or shadows, to highlight price range and direction. 4. What is the difference between a line chart and a candlestick chart? A line chart shows the closing prices of a stock over time, creating a simple visual representation of price movement. A candlestick chart provides more detailed information by showing the open, high, low, and closing prices, which helps traders understand market sentiment more clearly. 5. What is a moving average, MA? A moving average, MA, is a technical indicator that smooths out price data over a specific period to identify trends. The two most common types are the simple moving average, SMA, and the exponential moving average, EMA. Moving averages help smooth out short-term fluctuations and highlight longer-term trends. 6. What is a 50-day moving average? The 50-day moving average, 50 MA, is a commonly used technical indicator to assess the short-term trend of a stock. It averages the stock's closing prices over the past 50 days and is often used to identify support and resistance levels. 7. What is a 200-day moving average? The 200-day moving average, 200 MA, is a longer-term moving average used to determine the long-term trend of a stock. It is often used to identify the overall trend and potential reversal points in the market. 8. What is a trend line? A trend line is a straight line that is drawn on a stock chart to connect two or more price points. Trend lines help identify the direction of the market, whether it's in an uptrend, downtrend, or sideways. 9. What is support and resistance in chart analysis? Support is a price level where a stock tends to find buying interest and reverse its downward movement. Resistance is a price level where a stock tends to encounter selling pressure and reverse its upward movement. These levels are critical for predicting price movements and potential breakouts. 10. What is an overbought or oversold condition? An overbought condition occurs when a stock is trading at a price higher than its intrinsic value due to excessive buying pressure, often indicated by technical indicators like the Relative Strength Index, RSI. An oversold condition occurs when a stock's price has fallen excessively, indicating potential for a price rebound. 11. What is the Relative Strength Index, RSI? The Relative Strength Index, RSI, is a momentum oscillator that measures the speed and change of price movements. It is used to identify overbought or oversold conditions. The RSI is typically measured on a scale of 0 to 100, with values above 70 indicating overbought conditions and below 30 indicating oversold conditions. 12. What is the Moving Average Convergence Divergence, MACD? The Moving Average Convergence Divergence, MACD, is a trend-following momentum indicator that shows the relationship between two moving averages of a stock's price. The MACD is used to identify potential buy and sell signals, divergence, and overall market trends. 13. What is a bullish trend? A bullish trend is a market condition where prices are rising or are expected to rise. Traders and investors take long positions in a bullish trend, expecting further upward price movements. 14. What is a bearish trend? A bearish trend is a market condition where prices are falling or are expected to fall. Traders and investors take short positions in a bearish trend, anticipating further downward price movements. 15. What are chart patterns in technical analysis? Chart patterns are specific formations created by the price movements of a stock on a chart. These patterns, such as head and shoulders, double top or bottom, and triangles, help traders predict future price movements based on historical data. 16. What is a head and shoulders pattern? The head and shoulders pattern is a reversal pattern that signals a change in the prevailing trend. An upward trend followed by a pattern with 3 peaks, a higher peak in the middle being the head, and 2 lower peaks on each side, is a bearish reversal, while the opposite pattern, inverted head and shoulders, signals a bullish reversal. 17. What is a double top pattern? The double top is a bearish reversal chart pattern that occurs after an uptrend. It consists of 2 peaks that are nearly equal in height, signaling that the stock is struggling to move higher and may reverse its upward trend. 18. What is a double bottom pattern? The double bottom is a bullish reversal chart pattern that occurs after a downtrend. It consists of 2 troughs that are nearly equal in depth, indicating that the stock has found support and may reverse its downward trend. 19. What is a flag pattern? A flag pattern is a continuation chart pattern that appears after a sharp price movement. It resembles a rectangular or parallelogram shape that slopes against the prevailing trend, signaling that the price may continue in the same direction once the pattern completes. 20. What is a triangle pattern? A triangle pattern is a continuation or reversal pattern formed when the price moves within converging trend lines. It can be ascending, descending, or symmetrical. Triangle patterns typically signal that the price is consolidating before a breakout in either direction. 21. What is a volume in chart analysis? Volume refers to the number of shares or contracts traded in a security or market during a given period. In technical analysis, volume helps confirm trends and signals. High volume suggests strong market interest, while low volume indicates weak participation. 22. What is volume analysis? Volume analysis involves studying the amount of volume traded alongside price movements to determine the strength of a trend. For example, a price movement accompanied by high volume is often considered more reliable than one with low volume. 23. What is an oscillator? An oscillator is a technical indicator that fluctuates between 2 extremes and helps identify overbought or oversold conditions. Common oscillators include the Relative Strength Index, RSI, and the stochastic oscillator. 24. What is the stochastic oscillator? The stochastic oscillator is a momentum indicator that compares a stock's closing price to its price range over a specific period. It is used to identify overbought or oversold conditions, helping traders spot potential trend reversals. 25. What is a Bollinger Band? Bollinger Bands are a volatility indicator that consists of